Hello everyone. I have a lot of requests about the market structure shift. Today I will explain what is the real market structure shift. So let's start with the ranges. So for example, if a range starts from here and you know that every range ends at a QM. So let's say this is a QM here. So this is your range. Now, where is the problem with the market structure shift? When the price reaches at some major area, this could be any POI, this could be weekly level, daily level, or whatever the higher time frame level is. Once the price reaches there, this is where the people, they call this one as a market structure shift, and then they want to sell something from here like this. But instead, what the market does a little bit reaction here, and then it just takes a new high. Why? Because this market structure shift is basically for us is a QM, and you know that I have explained this concept in all of my videos that what is the QM. So if this is the QM, what we expect after QM? Once the price takes the QM, it approaches to the DOB or it doesn't approach. DOB is just a point of reference to control the risk that okay, we are entering here, stop loss here and targeting this one. But it is not necessary that the price will must reach to the DOB. The price just need to take the liquidity. And once the price took the liquidity, and that liquidity point for us is a QM rather than a market structure shift. But like I said, for someone or for a lot of people, this is the market structure shift and they are looking for sell here, but we are looking for buy here, and we are expecting that the price will go to take this high. So you see that during this area, you can see that we have the two types of traders. One type is looking for buys and the other type is looking for sell, and both on their sides are right. But since we don't adopt this system, we adopt the system the ranges, and every range confirms with the QM, and we are looking for the price to take the high, so we don't sell here. So where is the real market structure shift? So this is the major question. So I explain here. So let's say this is the range and the market is going higher and the price takes the QM, and now let this leg come down as much as it wants to. It could be 1 candle, 2 candles, 3 candles, it doesn't matter. But it took what? It took the QM here. Now if the price is somewhere in the middle and not approached to some level or some point of interest, of course we are looking for buy here, and we are targeting this one as a range high, and this is what our break of structure. So where is the market structure shift? This is the low of this leg, and the price goes higher and attempts to take this high. It could have the multiple swings here, or it could be just a single leg, but you just need to focus on this high. This high should not be taken out. If this high is not taken out and the price failed to take that high and instead take this low. This is the low which is attempting to make a new high after QM. So this low failure will become a market structure shift. So where is the market structure shift? It's not here, it's here. And now we have maybe another range, something like this. Now if the price is going higher to take any kind of liquidity, let it take. We are looking for sell somewhere from here, and our stop loss is above this level. And now we are expecting that the price will just go lower. But now the next question is, go lower until where? It doesn't mean that this failure swing and this market structure shift will take the price all the way here. The minimum target is it will take to the nearest point of interest, and that could be even DOB. If DOB is a little bit far, let's say if DOB is not here, it's somewhere here, so your target is a DOB, and from the DOB you need to check that we get fail. If we get fail, then maybe we are expecting that the price can go to take this low. Otherwise, after DOB, what we expect? We just expect that the price will go to take another break of structure. So this failure, first you need to think about it, that this swing failure, how far it can go. It doesn't mean that it must or it should go here. It can go. In many cases, it goes there. But your minimum target or the minimum area of interest is the nearest point of interest. And that could be DOB or any other order block. Maybe from there it attempts to make the another break of structure, or maybe fail again, and then you can target the next point of interest. Okay, let's check some examples. Look, this is the range starting from here, and after take the QM, this range is confirmed from A to B. And after QM, what I explained, this leg will attempt to make a new high. And if it makes a new high, then a new range will start. But if it fails, and where it will fail? It will fail here. Okay, so once it failed here, now we can call it a market structure shift. And for the market structure shift, it is not necessary that the candle must need to close below the level. Okay, so it's the market structure shift. Now we can find another range, something from here to here, and we can sell from here. Okay, and you put your stop loss here or you put your stop loss there, it doesn't matter. But of course, the most protected one is this one. Why? Because this is the swing which basically failed to take before. So who knows that this swing also becomes the liquidity, but this swing should not be the liquidity. Why? Because this is the strong high. So this is the market structure shift. And now look here. Look, this is the range starting from there to here. And after the QM, like I said, for some people this is the market structure shift, but for us it is a QM. So actually, rather than to buy into this area, we are looking for sell from here, right? And if the price unable to take this low, then this will be our market structure shift. And once we have the market structure shift, then once the price comes down, so from any order block we can buy like this, okay? But we are seller here at the first attempt, but if it fails here, then we are looking for the market structure shift, okay? So what happened? Sell here and the price took the new low, and then it becomes what? The breakup structure. And similarly, and then we have a new range starting from there ending here. Why? Because the price took the QM. Now this is the leg, just like from here. This is the leg which was going higher to take this high, and this is the leg which is going lower to take this low. If it fails here and then the price goes here, then this will be the market structure shift, and then from here we will be looking for buy, okay? But rather we are in first attempt, we are not looking for the market structure shift. In first attempt, we are just expecting that from the QM we will sell, and we are looking for the price will go to take the low, and then we will have another breakup structure. Why? Because we are looking for the lower lows and lower highs, and every time this will be the breakup structures, right? So similarly, if the price is coming like this, when we are selling here, we are looking for the price will take this low, okay? So we will sell this one in first attempt. But if we sold here and you started to see that the price is unable to take this low, and rather it is going here, so maybe you can sell it, or you can buy back, or you can cover your position at the break even here, and then this is your market structure shift, and then we can buy here, okay? So similarly here, in first attempt we are looking for sell, and if the price takes this low, this is the breakup structure, and we close the position here. And if it fails, then I told you what to do here, okay? And similarly, once the price, so now we have the range from here to here, right? After QM. So where is our next leg? Look, the next leg is here. Now what happened? The price, if we sold here from this order block, we sold, we are looking for the price to take this low. Instead, what it happened? Failure. But of course, this failure, how we know? When the price will take this high. So still the market is unable to take this low. Still unable to take this low. So if you sold here, better you cover up your position with small profit, whatever you have, because the market is showing here that the price maybe will not go to take this low, and it is showing some signs of failures, because maybe it looks like it will go back here, and then this will become your what? The market structure shift. If the price comes here, then we will say, okay, this is the market structure shift. And then what happened? And then the price just reached here, and then it turned into our market structure shift, okay? And of course this level is also the major level, so that's why rather than the market structure shift, this is the market structure shift, and then we got a change of character. But because this is very deep and reached to the major structural point, but if the QM is let's say this leg is somewhere here like this, and then it fails, and then it becomes the market structure shift here. Okay, and then we will be looking for buy here and targeting this one. Okay, since this leg already reached to here, so even if this is a market structure shift, but at the same time this is a change of character as well, so this is a little bit different concept. But of course you understand that what is the major market structure shift. We can check maybe a few more examples. Look here, look. So for example, this is the range, and this range confirmed after QM, right? So once the QM confirmed, and if you sell here, and let's say your stop loss hit, and then you just keep moving, and after that this is your QM here. So once your QM is, and this is the leg which is going to take this high, this leg should fail, and if this legs fail, then this will be the market structure shift if this leg fails. Okay, but rather, like I said, the first attempt we will buy, and we are targeting this one. So that's why this is a new break of structure or change of character. Why this is a change of character? Because this failed here, our entry failed here, let's say. So now look here, this is the QM, right? So this is the range. Once this is the range, this is the leg, and this leg need to attempt, and if it fails, then this leg will be the market structure shift. But rather what it did, because we are already a buyer here and it reached here, so we just close at profit, and this is not the market structure shift. And then what happened? Look here, this is the range, and this range confirmed here, and this is the leg which is attempting to make a new high. So rather than to make a new high, instead what it did, it failed. So once it failed, it turned into what? A market structure shift. So once it is the market structure shift, now this high is protected high for us. We are not expecting that the price will go to take this high. Why? Because now we got the market structure shift, and now we will find the ranges maybe from here to here or whatever, and then from some order block we will sell. And I told you we will sell until some order block, and who knows that the market just come here and then it just goes to take this one, and in this case it is still following the structure. Why? Because this was the range, the market just came to the order block and then going higher. But now because of this market structure shift, we can sell it like whatever the ranges you find here. Your bias is on the sell side only, but not on the buy side, because we are not expecting that the price will go to take this one first. First the market, after market structure shift, we are expecting first it will go to some order block, and after that it can go to take this high. But of course here we will check that if we find some another market structure shift on the lower time frame to buy, and then we will go here, and otherwise it just take this one. And then what is this? This is a change of character. Okay, so similarly look here, this, what is this? We have the range from there to here. Okay, and from QM what we are looking for? We are looking for sell. And what we are expecting? We are expecting that the price will make another break of structure. So in this case we don't have a failure swing, and that failure swing is basically the market structure shift. So if the market, what it does here after QM, this is the leg, and it fails and it turns here, and now we have the market structure shift, and now we are looking for buy here and then we can target until the DOB, and from the DOB we are targeting another breakup structure. Why? Because the lower low, lower high, lower low, lower high, breakup structure, and another breakup structure, something like this, until we get a change of character, and then of course we are a breakup structure buy, breakup structure buy, breakup structure buy, and once we got another change of character, then breakup structure sell, something like this. So that's why if this becomes a market structure shift, then from here, let's say this is the failure and this is the market structure shift, and now from here we are looking for buy until here, and from here we are looking for sell until here. Okay, so I hope it makes sense. So this is how you will find your market structure shift. Market structure shift is not your QM. So a lot of people, they think this is the market structure shift, but for them it is a market structure shift, but for us this is a buy point, and we are expecting that the price will go to take a new high. Why? Because another breakup structure. So they are selling here and we are buying here. You see the conflict between us. So that's why you have to understand that this QM is not the market structure shift. The market structure shift is after the price takes the QM. This is the leg which fails to take a new high, and it fails, and now this turns into the market structure shift, and now from here we can sell until the DOB or whatever the order block is, and then we are expecting that the price will go to take this one, or maybe just go to take this one. Okay, thank you.